So the July numbers are finally out, and as of that report, we have over 2,100 listings active in the KWC region. With that being said, inventory levels are a decade high, and on the other hand, sales activity is a decade low. Let's break down all the numbers right here, and more importantly, what it means for you if you are a buyer or seller in this market. Stay tuned and let's get right into it. And just in case if this is your first time to this channel, my name is Detached. I am a local real estate agent serving Kitchener and surrounding towns. And I got people just like you that I love helping every single week looking to buy or sell here in KWC. And I absolutely love it. So whether you are thinking of buying or selling, or if you just want to have a candid dialogue around how to navigate this market, I'll be happy to have a chat with you. And I promise I won't be chasing you. Even if you were to reach out to me, I'll give you the time and space you need to make the informed choice. But nonetheless, I'll leave you with some value if you were to reach out to me. So feel free to reach out. All my contact info is right below. I'll be more than happy to help you and family make a smooth move in and around Kitchener-Waterloo.
All right, so you can probably see my screen by now. And what I've done here is put together a PPT slide deck where I've basically compiled the data from the Regional Real Estate Board to keep it data-driven, concise, and to the point. So having said that, let's dive straight into it. For the month of July, total of 644 homes were sold through the MLS system. Now, if you were to compare with July of 2024, you could say it's fairly flat. But if you were to compare with the previous 10 years average, there is a material decline of over 14% in the resale activity for the month of July. Now, one important factor I do want to point out, if you were to compare my previous market reports, where we always compare this 10-year average, at some point that decline was over 20%. It seems to be improving, but we will look at numbers more deeper to see if that's actually the case. Now, average sales price, just over 735, down both year over year as well as month over month, close to 6%. We will still look at the benchmark sales price, not to worry about that. But what I want you to pay attention to is the inventory levels that are very high still to date. I mean, like I said, we have well over 2,100 MLS listings out active in the Waterloo region as of this market report. So, if you look at the July average for a 10-year average, well, it's very high, I would say. Guess what? It's shifting towards more balanced conditions, but I would like to argue, as I have in the past, it's more skewed towards the buyers. It's no longer as balanced as you would like to think. Now, moving forward, let's look at sales breakdown. What sold, what really moved the market activity? Guess what? Detached homes is what was a dominating factor. You can see roughly 6 out of 10 homes that sold in the month of July were detached, followed by the townhomes, and then some condominiums, only 80 units, and some semi-detached homes as well. But, this decline in the townhome trend is partly because with the buyers having a budget of, typical first-time home buyer budget of, say, somewhere between 6 and 800,000, now they do have many other options besides the townhomes. So that's what opening up options and more demand for the detached homes over that of the townhome. When the market was hot, all they could afford for the most part was the townhomes. So that could be one of the factors contributing to the decline of the townhome sales. Now, average sales price, this is again, to give you a quick heads up, I am going to show you the benchmark price. Detached, just over 850, townhomes, just over 600K. You can see both year over year and month over month, all property types have seen some decline. And that's basically evident in the market if you see it out and around, even your neighbor's home or some home that's sold on your street. If you compare with last year, it is likely that's gone down in value, and that's just the current market situation. Overall, you can see the condominiums are experiencing the highest decline, and that's a massive decline. If you ask me, over 16%, close to 17% decline in the condo. This is again the average sales price. I am going to take a slide forward and look at the benchmark value. Now look at this, Kitchener-Waterloo, and this is Cambridge. That's how the data is separated between from the Regional Real Estate Board. But if you look at overall composite, like that includes all 3 type of homes, 7.3% year over decline. For Cambridge, that's about 4.2%. But if you look at the condo apartments, that's where we have seen a major drop. Especially, I'm very, surprised to see townhomes showing this much drop in value. But again, that could correspond to what I just mentioned about townhome demand being, declining because buyers now do have more options, better options in maybe a single family space. Moving forward, listing and market pace. Let me move myself here so we can look at this. We had close to, 1,350 new listings. Okay. Now that being added to the current inventory, we had well over 2,100 total listings in the market as of this report. In July, down 3.1%. So not, there's some decline, but they are up by 21%. We looked at it. Average days on market is again another great sign to see where the market is heading. 32 days. So that's increasing month over month. And as you can see, in June, it was 27 days. In July 2024, which is previous year, same month last year, it was 22 days. Now it is up to 32 days. Now, if you compare the 5-year average for average days on market for the month of July, that was well under 20 days. It was only 17 days average market days. So that tells you a ton of more options for buyers. You don't have to rush. Even, yes, there are homes that are getting multiple offers even to date. So well-priced home, well laid out, and priced competitively and marketed well are getting some good response. They are getting multiple offers. But as a buyer, despite those multiple offers, I just give an example. There was a house just this month in Laurentian West. We had 9 offers on that house. Still, it sold conditionally. So do not undersell yourself in the anticipation of losing out a bidding war, because guess what? You will still always have more options, even if you lose out on a house, but don't overspend and overextend yourself in this current market. Now, this is kind of a snapshot. I have compiled the data from multiple, economics, RBC economics, TD economics. If you look at the current market environment, it's more balanced conditions, definitely. From a seller's market towards a more balance, and with the rising inventory and lowering sales activity, it's kind of getting into the control of buyers more than it is in the control of sellers. As you can see, buyers are benefiting from increased selection, longer decision windows. So like I said, you don't have to rush. You can sleep overnight, still, take your time to do your due diligence and then make the informed choice. And you can see improved negotiating powers. I will move myself here. Seller adjustment. Sellers are adjusting pricing expectations. So we always say in the market, sellers are the last to accept the price adjustments, or, they are the last one to realize that the market has shifted downwards or the prices have gone down. So seems like sellers somewhat are adjusting the pricing expectation to match the current market reality, with successful transactions requiring competitive pricing strategy. Property type, condos are experiencing the highest decline, with semis showing stronger resilience in both sales volume and price stability, and of course followed by the detached homes. Now, moving forward, we obviously saw that towards the end of July, there was a rate announcement by the Bank of Canada, and we all know that by now it was held steady. Markets are still pricing for 2 more rate cuts between now and December of 2025. We will see how that pans out. I think it would very much depend on the inflation data that comes out, because the tariffs and the counter tariffs are already weighing on the inflation numbers that we saw that came out last month. But, next rate announcement is in the month of September. So we will closely follow to see if that was to happen. If so, that would somewhat improve the buyer sentiments and the affordability. But more so, I feel like the economic challenges and the broader economic conditions that kind of is weighing on the buyers. And you can see here, Canada-US trade tensions are impacting the consumer confidence and creating economic uncertainty. It's no news for us anymore. But we also feel like, even if the way US has reached the trade agreement with many other countries like Japan, European Union, and so on, we do feel like even if US was to reach a trade agreement with Canada, I feel like it's very much going to be weighted towards benefiting US versus Canada. So But yes, what it will do is it will reduce some uncertainty. It will definitely result in improving buyer sentiments, because right now there's weighing uncertainties in the broader market conditions and the economy is definitely not helping buyer sentiments, and Waterloo region real estate is no exception to that. So we will see how that pans out over the coming months towards the fall and the winter. But as we stand right now, buyers are totally on the fence. What it means for you if you are a buyer or a seller. Let's see, if you're a buyer, let's say you're a first-time home buyer or a move-up buyer. Well, first of all, you have more choices. We saw how much inventory we have in the market and longer market times. So homes are staying on the market much longer than the previous averages. So you have more time to make the informed choices. Price declines across all property types, improving overall affordability. Now that would, again, you will have to factor in if you are selling and buying, then just note that the house that you sell will also get a lower price than you would have anticipated back in, say, 22 or 23. But guess what? It will adjust when you buy. You will also get a better deal than you would have back in 2022 or 3. So price declines and stable interest rates. I mean, generally speaking, even the bond market, we have seen recently the bond market has gone up. So the fixed interest rates also have gone up well over 4%, where I think back in June or July, it was hovering well under 4%. So that was a good time to actually lock into the fixed rate under 4%. But nonetheless, stable interest rates will help the buyers somewhat, in terms of when they're buying. Let's switch the gears and see if you are a seller. Well, competitive pricing and marketing is essential to attract serious offers. If you are just playing around with the prices, guess what? You're basically playing with fires. The house will likely sit on the market for longer than expected. Anyways, it's taking longer. Anyways, average days on market is well over 4 weeks. So it's very much important for you to price it very competitively, have a clearly laid out and strategically planned offer strategy and pricing strategy, as well as backed up by a strong marketing strategy. So that's all it will take altogether to really get your house going when you put out in the market. Well, prepare for longer marketing periods as average days on market increases, and enhanced competition from increased inventory requires superior property presentation, because buyers do have more options. So they're no longer as adjusting or giving in to the minor fixes or repairs that are needed in the house, because they are more inclined to look at a different home that may not have as many repairs needed. So that's just the current market condition if you are a buyer or a seller from both lenses. So market conditions overall have shifted significantly from 2021 to 3 period, requiring new strategies for both the buyers and sellers to achieve their real estate goals. So that's my take about it. If you look at what to do, right? What the outlook looks like, basically next, say, fall, and then within next 6 to 12 months. So what to expect? Based on my analysis and the information I have at hand, again, this is what I can see forthcoming. Continued price moderation across all property types, and we are seeing it month over month. Buyers' favorable conditions, I mentioned earlier. It's more weight towards the buyers, despite us telling it's balanced market, and it will persist through the year end. Seasonal pattern may boost fall activity slightly. We do typically see come September until about mid-November, the activity do pick up, because many of the buyers, many families are out. They're taking breaks, kids are home, so they're not actively looking to move up or buy or sell. But come fall, when kids go back to school, I feel like many families do get back to this, and this kind of gets onto the front burner. So fall market activity might see some improvement, but we will see if that happens. Next 6 to 12 months, which is basically more important. That's what I look at it. Gradual market stabilization, because overall people are starting to realize that it's not going to be the end of the world, and nonetheless we're going to have to respond to it one way or the other. So trade tensions will eventually ease, and we will get some improved buyer sentiment. Detached homes expected to maintain most price stability, and that's looking at the what has happened to the price of a detached home from 21 to now. I feel like they are the ones to hold the most value in comparison to all property types. Condos, I have mentioned in my previous market reports, they continue to face their challenges, and with more supply coming into the market, price pressures are immense on those condos. So local market is expected to maintain a shift towards a more balanced conditions, with property type performance varying based on supply demand dynamics in each segment. So it's purely based on that. We are seeing obviously stronger demand in the detached home segments, so the prices are not as affected, versus we are seeing less demand in the townhome and condominium, other property types. So we are seeing prices coming rapidly down for those property segments. But that's overall how I look at the market and how I would sum it up. But let me know what your thoughts in the comment below. And if you got some value from this video, be sure to give it a thumbs up, subscribe to this channel, and tap on that bell. And yeah, let me know in the comments, how did you like this kind of format? I try to keep it concise and to the point, and like I said, more so data driven. So if you like this format, maybe I'll continue doing it, the market updates for future in this format itself. And right, it says here, whether you are buying, selling, or investing, or in and around Kitchener-Waterloo, be sure to reach out. I'll be more than happy to help you make a smooth move in and around Kitchener-Waterloo. Until next time, well, I will continue to show you around the town.